Hello, my name is Andrew Thake, and I'd like to welcome you to this keynote panel, which is a gold outlook. What were the key trends and investment themes that we saw in 2021, and will we see more of the same in 2022? Joining us is an esteemed lineup of panelists. We have Kevin McElligott, Managing Director for Australia for Franco Nevada, Alain Corbani, Portfolio Manager of Finance SA, Willem Middelkoop, Founder and Chief Executive Officer of Commodity Discovery Fund, and Jayant Bhandari, Senior Analyst, Mining and Minerals and Institutional Investor Consultant at Anarcho Capital. A warm welcome to you all. If we can then probably kick off with an opening question to Willem. If you had to describe the gold market in 2021 in one sentence, what would it be?
I can do it in one word: frustrating.
Okay, that is a very, very short sentence. I see Kevin, you sort of laughing. What would be your sentence?
Yeah, I can't do one sentence. Look, on the one hand, the fundamentals are very strong overall, but the gold price isn't. It's looking a bit weak, mainly because it's coming off a record high. So. To me, I think it's a strong gold price. It's all very good and projects are moving forward, but everybody's looking at 12 months ago and saying, oh, you know, things are a bit down.
Yeah, I mean, in terms of just on Kevin's comments, Willem, when you said the market was frustrating, I should have asked a follow-up question, why? So do you want to elaborate on some of the frustrations you kind of have found?
Yeah, because everything is happening what we expected and what we told our investors. A huge currency debasement because of all the money printing started after the Lehman crisis. Of course, we got into higher gear after Corona hit. And everything is up, you know, electricity, gas prices, petrol prices, everything is up. Coal price, even coal is jumping. And the only thing which isn't moving is gold and silver. But of course, gold and silver had its move last year. It's very normal to have a technical correction. I think the technical correction is almost done. And that's what we tell our investors. And precious metals, the shares, the equities are down 35 to 40%. We're only down 2%, fortunately, since August last year. And I think the next leg up is about to begin.
Mm-hmm. Bringing in Jayant, keen to sort of get your sort of thoughts on the gold market, but particularly about any thoughts you've got on US monetary policy. Are we on the cusp of change in monetary policy in the US?
Well, I mean, they will continue to print. They will make up reasons why they should taper off quantitative easing. But the cultural environment is such that they have to keep printing. They are coming out with another $3.5 trillion pound dollar package. And that's not going to reduce inflation or control stagflation that the US is currently facing. Prices of everything is going up. And businesses can't find employees, and people are finding extremely difficult to get their supplies. Mining companies are complaining, and not just mining companies, but other manufacturing companies are complaining about lack of spare parts. So this is not an easy situation for any country, including the US.
Mm-hmm. Alain, is gold fair value at the moment?
This is a good question because it cannot be answered in one sentence, because we had this gold consolidation, and I'm going back one second on your previous question to Willem and Kevin. Actually, what rates were readjusted. So gold did consolidate in response to a rate readjustment, and this was to be expected. Of course, there are so many other reasons that should push gold much higher, that I will say, is it fair value? The answer is, based on the rate readjustment and the strength of the US dollar, the very short-term strength of the US dollar, yes, gold is fair value, but, and this is what is the most important, the but is that rates have reached a tipping point. We always said that 150, 160 on the 10-year would be a tipping point, and it seems again for the second time that we are reaching this level. So the fair value for gold in this environment with a weaker US currency is much, much higher. Mm-hmm. So yes, it's fair because rates were readjusted and the US dollar strengthened, but no, it's not fair because the next leg will be for a weaker dollar and most probably stable, if not lower rates, nominal rates.
Mm-hmm. Do any of the other panelists, do you have like a different point of view to Alain?
Yeah, I don't think gold is rightly valued because we track the price of gold on a 100-year chart, and if you plot the price of gold and you plot the amount of money printing, there's a clear correlation, and you see that the gold price always moves back towards the line of M2 worldwide, and we saw that in the 1930s, we saw that in the 1970s. If you look at the current graph, you know, the gold price needs to move back towards over $2,000, and it should move towards $8,000 or $10,000 to be in line with the money growth. So if you look at that statistic, there's so much upside, and this is clearly possible because if you look at the price moves which we've seen in other materials, look at what had just happened with uranium. A doubling of the gold price within 12 months is easily possible. But we all know the gold and silver prices are managed by the usual suspects. And Paul Volcker made this very clear when he was once asked what was the mistake you guys made in the 1970s. And then he said, we didn't control the gold price.
Mm-hmm. Jen, I mean, do you think that tapering QE stimulus is still on the table?
Well, I don't think they are going to be able to taper really in any sense because they're going to print a trainload of money for several pet projects of the Democratic Party. I truly think that gold price has done reasonably well, given that it has actually gone up quite well, and it is stuck between 1750 and 1800. So it does fall quite often, but it reverts back to its normal between 1750 and 1800. And gold price, as Kevin said, actually did do quite well last year. So this is maybe just a small correction in the short term. But at the same time, I agree with Willem that it's frustrating because I would have expected gold price to see much higher than it is for the sheer fact that we have a massive monetary crisis across the world, in the Western world and in the third world. We have printed a lot of cash. There has been a huge amount of inflation. So I would have expected that to reflect in gold price. And I think it will eventually reflect in the price, but it might take a while.
Mm-hmm. Kevin, sorry, Alan, I think you're about to, you had your hand up.
I understand everything you say, and I fully agree with you. But keep in mind that a lot of investors have positioned themselves for a 2013, 2015 type of environment where tapering was going to start. QE was ended in 2014. Rates went slightly up. Real rates went up. So this is exactly what a lot of investors today, and I think they are completely on the wrong foot, completely. But this is what Main Street has been positioning itself for: higher rates, the transitory inflation, and therefore positive, if not higher real rates. Whether we agree or not with it is a different story, but this is really what has been happening over the last the last over 2021. So yes, I agree.
Alain,
Yes.
is this a passing phase? Is transitory inflation true? Is the expectation of higher interest rate actually true? So is this expectation only short term, or this will going to last long term in your view?
Oh, short term. I think that the consolidation in the gold price is over. It's done. It's really done. I think we have reached the bottom here. And you can see it with rates over the last couple of days, but we're not going to focus on what happened yesterday, but you can feel like nominal rates went a little bit higher. The US dollar did strengthen, and at the same time, gold did well. So this is a pure short-term view, but this is the reality. The reality is that inflation most probably is not transitory. I think that we're all going to agree on that. Printing money supply, this is so different from 2013 and 2015. So this is a completely different environment, opposite actually to what happened in 2013 and 15, opposite, but give us a little bit of time to prove to the audience and the investors that our scenario is the right one.
Question for Kevin. So what do you think is needed for gold to rally? Is there a path back to record highs by the end of the year?
Oh, yeah, there is, but it's an ugly path. It means things are getting bad economically, and people are getting scared, and there's this flight to safety. I don't want to see that. I was reading something recently, and one of these catastrophizers who's predicting financial collapse, he says, "Yeah, I'm putting everything into gold, silver, and Bitcoin." And I just banged my head on that. If you think cryptocurrency is going to save your butt in a financial collapse, you're delusional. Sorry, but I certainly didn't like the scenario that he saw. And it's one of those things. I've said this before. I think probably to you. Gold performs well at both ends of the market. When things are going terrible, gold does well because there's the flight to safety. When things are going great, everybody's feeling rich and they're putting money into luxury goods like investing in gold and stuff like that and piling up on their investments. We're in this sort of middle market right now where some positive signals, some negative signals, record high stock prices in some instances, but then inflation creeping back in and debt's up and, supplier dislocations and stuff like that. So it's really mixed right now. And that's why I'm not confident about higher gold prices in the short term or whatever term you want to define here. But that being said, I like these gold prices. I think if you've got a good project and a good deposit, you can make good money right now. And there's still plenty of capital available. So yeah.
And Kevin, and mining companies are still very disciplined, which is really a plus.
Yeah, So I'm quite positive. We're looking at loads of projects, investment opportunities right now, and it's not just buying existing assets. After the last global financial crisis, we saw there was a lot of recycling going on, just changes in ownership and refinancing and stuff. Right now, it's a lot of development, and it's not what's holding it back is not availability of finance. It might be other input factors.
You mentioned in your answer to your question, you touched briefly on a Bitcoin. I'll ask it to you, Kevin, and then I'll throw it open to the rest of the floor. Has the rise of Bitcoin cannibalized gold?
I'm guessing it has. I'm in denial because I still don't believe that this thing exists and that there's people actually putting good hard-earned money into it. But yeah, I guess it has.
I saw you like.
There's a bunch of copycats out there too.
I couldn't agree more with Kevin. And the good thing is that maybe the irrational crowd that was investing in gold has left the gold market and they have gone to Bitcoin. So maybe this will help gold market consolidate better and rise up nicely as time goes by.
What about what one sort of themes we always hear in the industry is obviously attracting general investors into the mining industry, and I'm guessing, Kevin, that at Franco Nevada you obviously have a lot of talk where I guess sort of with like generalist investors who aren't necessarily natural resource specialists. Where are they at the moment with regards to investing in gold? Are they kind of out at the moment just due to the slightly lower gold prices, or are you still having positive conversations with them?
No, I think we're still having positive conversations, but we have a different conversation. You're right. Most of our investors are generalist investors, and they see it as like a safe place, a safe way to invest in either gold or mining in general, just given our sort of model that we have. But they're still there. But I don't think that they're there because they love gold. They're there because they feel, oh, I should probably have some gold in the portfolio, and Franco seems like a safe one to put the gold allocation into. So
sure.
I the feeling that the sentiment's changing and more people are allocating more of their funds to precious metals.
Sure. Sorry, Willem, I think I saw you raising your hand there.
Yeah, I think there's a sizable shift in investor interest into the precious metal space, but commodities more in general. If we look at the inflow into our fund, we're a small fund, and we were always around 30 to 50 million euros. Last year, during the March 2020 crash, we went down to 25 million euros, and now we're at 120 million. So we had a huge inflow this year. Since January 1st, we had 40 million euros of inflow. And we didn't advertise, so people are aware of the currency debasement. People are aware of the negative interest rates. I think that's, and we don't have to do any marketing. They just drop by the office, and normally they would invest tickets of 25 or 50,000. We're a retail fund. But now they come up with tickets of 1 million or 2 million or 3 million, some of them. And that's a different kind of investors. There's a more advanced type of investors, more the family offices. And the family offices I think are better informed, have better advisors, and they're all starting to move money towards all government can't print. And I think that's a huge trend. And you see that everywhere. And that explains why stocks are up. That explains why real estate is up. That explains why everything the government can't print is up. And this is a very scary development, because this is Weimar in the first stage. I reread The Death of Money, the book on the Weimar hyperinflation. This is 1920 in Germany. There was a shortage of labor in Germany. The stocks went up, the real estate went up. It's the same.
You seem to have a fairly sort of like gloomy outlook on that, Willem. I know that, gosh, when I first met you, this is about sort of 6 years ago, you'd just written your book, I think in the state it was called The Great Gold Reset, or The Big Reset.
The Big Reset.
The Big Reset. Yeah. So you're kind of like, are you kind of now planning to bring out sort of a revised and updated edition?
Yeah, well, that will be needed, but I wouldn't have to change that much, because everything I wrote in that book is actually happening now. The only thing missing was central bank digital currencies, because we didn't have them around. And the central bank digital currencies is a way for central bankers to fight the crypto space. But they will even put more petrol on the crypto fire, because the central bank digital currencies is just a new layer of fiat money. And if you want to move people towards Bitcoin and other crypto, you should do that. Then I don't agree with Kevin, because I put quite a bit of my money into the crypto space, and it's the fastest horse in the race. And Bitcoin has been going up 9% on average per month since inception. And investors not putting any money into Bitcoin, which is the digital money, which is digital gold, in my humble opinion, because it's the center of this new digital asset class. If you don't put
Okay, you just cut out there just slightly. I'm just keen to throw that open to Jen. Do you see Bitcoin as digital gold?
Oh, I don't. I think Bitcoin has zero value. It's made up of zeros and ones. It has no inherent value, and eventually it should go down to zero. The problem is that you can't really predict how long it will take for it to go down to zero. I tried short selling GME, GameStop, which has gone up for no good reason. And I actually had to cover myself at a huge loss because I was not thinking much about the mass psychology. So mass psychology and mass irrationality can stay on for far longer than I thought was possible. And it has indeed happened in GME, GameStop, and it can continue in Bitcoin for a while, but eventually its value is zero and it should come to zero at some point of time.
There's a problem once, once the price of something becomes detached from fundamentals, you don't know how far away it's going to go before it comes back to earth. It does, but you don't know how far. I'm curious though, just to get, you talked about cannibalizing gold. One of the other factors I think is every month there's some commodity that's hitting a new record high, not just gold, whether it's copper, nickel, iron ore, and it's like, if I was an investor, I'd be looking at these headlines and saying, okay, what's next? Where's the next shortage? What's the next thing that's going to go up 100% over the short term? Yeah, they might find that a bit more exciting.
One other topic we kind of like briefly touch on, like generalist investors, and I guess that one thing that's kind of like often said is that generalist investors coming into the gold market, one thing that they'll be looking at is ESG, and obviously ESG in the green economy and decarbonization is sort of like a big theme happening at the moment within the mining industry. I'm just kind of curious, maybe I'll go to yourself first, Alain. How important is ESG to you from an investment perspective?
Well, it is becoming a real subject. It wasn't 2 years ago, and now our shareholders are asking questions about this theme and how we approach ESG and how is our sector approaching ESG. Now, to be fair, we have to distinguish between E, S, and G because there are really three different parts in trying to address your question. So, as far as S and G are concerned, basically, I think that the mining industry has been at the forefront of the changes way before every other industry. And that goes back to decades ago. And not necessarily because they felt like they wanted to, but really because they had to. So the SNG is easily, you can give it an answer, a quick answer and convincing answer. The problem lies with the E and the environment and those gas emissions, and you have a lot of different rating agencies who are providing their services for the mining industry. The reality is that there is no norm today, and as long as we don't have a norm, it will be very difficult to give our investors an honest answer. But what we could focus on is the trend. Are those mining companies heading into the right direction? That's the first element. And second of all, let's have everybody sit down around the table, figure out what the norm for the industry is and work on it and start disclosing data and statistics that are understandable by everybody else.
Yeah. Yeah, I mean, I think that if I had a sort of like a gripe about ESG, it is this whole like plethora of sort of standards and which guidelines to follow, which I imagine must be a bit of a challenge. I mean, Kevin, obviously with Franco Nevada being, I guess, both an investor and a mining company, Which of the standards do you go and follow? I mean, there's obviously the World Gold Council's mining principles, which I assume that you obviously like signed up to. But what else do you look to go and sort of like follow and adhere to within the ESG space?
Oh, the short answer is we try and cover everybody's checklist. So what we try to do is have no black marks, so nothing that prevents anybody from investing in our company. There's 3 or 4 of them now. To a certain extent, there's a bit of competition going on right now as to who's setting the standards. Mm-hmm. And we're not trying to pick a winner there. So we're just. I mean,
is that okay? But is that like competition good? And I know because usually the answer is competition is sort of like a good thing. But I've seen a chart of these standards, and God, if I was a miner, I'd think I'd have a sort of like a minor heart attack trying to figure out which one to go and follow, or which ones to go and follow. I mean, maybe a large company like Franco, was it 7 billion market cap? You probably have got the sort of the time and the ability to follow most of them. But surely for some of the smaller ones, it's a little bit harder.
Yeah, look, I'm not involved in it directly myself, but I do. It's something that gets talked about amongst the group, on a weekly basis, and it does feel like every week there's a new one that's popped up that we're responding to their checklist. Yeah, we'll see how it settles out. It's like it's almost like an emerging industry or emerging market. So we're at the beginning, there's loads of different standards and competitors and stuff like that, but over time it sort of shakes out and consolidates around a handful. And regulations of market just as much as anything else is.
Yeah, but Kevin, you belong to that very lucky niche of royalty streaming companies, and your emission is almost null. So I understand that you are,
and it's easy for us to comply and fill out the check. Yeah, so yeah,
exactly. We do
it because it's easy to do.
Yeah.
Yeah, I'm gonna throw this question over to Jayant, because I know that Jayant will, as on like ESG, will definitely have an interesting answer. How important is ESG to you from an investment perspective when it comes to gold companies?
Well, Andrew, we have to remember that ESG, as it stands today, is mostly about virtue signaling. And we live in an environment of wokeness and virtue signaling where everyone wants to look good rather than be good. If you want to do good, you don't have to advertise it. What ESG does is that it employs expensive consultants, and it wastes a lot of glossy paper to print ESG reports. So I think it's a big problem for the society to have this ESG, because it distracts people from doing the right thing and makes them focus on advertising their goodness. Let's look at one specific aspect of ESG. Companies want to employ women and people of color to their boards, and they want to advertise that. Now, everyone knows that they would have been promoted out of turn without having proper merit, which means that it degrades these people of color and it degrades women, because the audience is going to think, is this woman or is this person of color there because of merit, or is that person there because that person has been pushed up because of ESG and EDI? So it degrades people, and people of color like me and a lot of my friends find that abhorrible, deplorable. We find it degrading. Of course, I mean, most companies have to have an ESG sheet these days, because we exist in an environment where simplistic, naive people want to invest only because you advertise your ESG properly. So I have nothing against companies who have a presentation slide on ESG, but those people who really believe in it are the kind of people I want to stay away from.
Okay, but I mean, just to sort of pin you down on that is like, again, I mean, if I understand you correctly, you're saying that overall you have nothing against really people sort of like doing a lot of a lot of the S and the G, as long as they don't like advertise and go and like talk about it. So is it more the case of the talking about it that you object to, rather than them actually implementing good sort of like environmental protocols, working with communities, working with local governments? So you don't actually object so much to a lot of the E, S and G. It's more the case of the flag waving or advertising about it.
Well, we have to follow the regulations. Mining companies have actually done a fairly good job of following the regulations to do with the environment, looking after the locals. So I don't see a problem. I don't see why a profit-making corporation has to go above and beyond in terms of looking after the locals, which actually creates immorality among the locals. Locals get too much of free money in many cases. So by forcing companies to have an ESG program and advertise it, they do it in a way that actually corrupts the local people. It distributes free money to these people when they shouldn't be getting it.
Okay. Let's move on to I think the big news story of the week. Wilhelm, Kirkland Lake Gold, Agnico Eagle, the gold merger. Is that good or bad for the gold mining industry, and why?
I think it's just a natural development. Since listed companies always try to move upwards and to be more competitive, and so I think nobody is shocked to see this merger. The only part of the news people were shocked about was the price. There was no premium paid, and many speculators were burned that way. But I think we can expect more of these mergers and takeovers. But of course, this doesn't solve a major problem among especially gold and silver miners, that's the depleting reserves. So both of them don't have a great future if you look at the current projects they own. I think we are specialized in investing not in the major producers, because we hate to invest money in companies who have less gold, who own less gold and silver at the end of the year than at the start of the year. So we are discovery investors, and we put our money into companies who have more ounces in the ground at the end of the year than the beginning of the year. And I think the companies which are responsible, the smaller companies being responsible for the larger discoveries, they will do very well. They will outperform the markets, and that's the space we concentrate on. So we build positions in the top 100 best discoveries worldwide, metal agnostic, and I think they will always outperform the producers, maybe not the streamers and the royalties, but the producers, they will always do less.
Yeah. One of the a common statement, I think it could have been Peter Groskopf of Sprott actually said it when we interviewed him at Mines Money last year. He talked about that due to sort of COVID-19 and restrictions on travel, there'd been a bit of a bottleneck in M&A. They'd expected that balance to readdress itself in 2021. I guess as a bringing in Kevin, can you see more M&A on the horizon? Can you see more Kirkland Lake Gold and more Agnico Eagle happening? Do you think it is kind of good for the industry, or is there a danger of it being just mergers for merger's sake?
Yeah, like yeah, I'll disclose my personal bias. I'm not a big fan of any big mergers, period. You know, I just don't think they're all that value creating at the end of the day. But that being said, yeah, I think we're going to see more. I don't know who the candidates are. It's hard to spot who the next next matchup might be. I mean, there's talk of one here in Australia right now. I don't know if it's been announced, but there's been speculation in the press the last couple of days. We'll see if it goes ahead or not. But I guess Overall, is it a good thing? Sure. It's going to shake some projects loose. It's going to shake some people loose. They're going to go out and form new outfits and get another project going. And a few projects that were sitting sort of not mothballed, but not going anywhere within the company. That's usually a good time for them to get recycled into new owners. And yeah, overall, sure. Maybe not necessarily for the shareholders themselves. We'll see.
So Andrew, in my view, a lot of big companies haven't been traveling for the last 1.5 years. The smaller companies have found it easier to travel around. And when I was at the Denver Gold Show, some big company people did tell me that it's becoming easier for them to now travel around because their legal department is allowing the management to travel. So there is an anticipation that M&A activities will pick up over the next few months. My view is that there is a good chance that some of the advanced development stage project companies will be bought out because, as Willem was saying, those companies will actually add ounces to these big companies. And those are the companies that might actually provide the most benefit to an investor.
But I mean,
can I say a few words, Andrew?
Yeah, sure, please, yeah.
Okay, because this is I love this question, so I want to have my saying. So M&As are good as long as they create value, and we saw it over the last 3 years. All those M&As which took place did create value. It wasn't in the name of growth. It wasn't in the name of dilutive growth. It was in the name of maintaining profitability or increasing it, and basically getting rid of marginal assets. So this theme is good. And when you see those mergers with no premium, it's even better for us managing funds in this precious metal universe, because it means that we are far, far away from the peak of that cycle. So as long as these mining companies are behaving and they are focusing on the shareholders' interest, and they have in the M&A spectrum, this is really an excellent thread for us to understand that as long as we are not doing foolish things, we're still in that bull cycle. So no premium is good. Merging for being accretive mergers are excellent, and this is what we have seen. And for Kirkland and Agnico, just one word: nobody else could have merged or acquired Kirkland Lake or Agnico, because these were the two most expensive companies in that universe. So that they merged together made sense. At no premium made sense, because just remember that Agnico was down before the merger was announced. I think it was down 25, 28% year to date, and Kirkland was up 6%. So there was already this discrepancy in performances that allowed the merger to take place. So all in all, it's good. Does it make instant money for Agnico or Kirkland Lake shareholders? The answer is no. But as long as it's not a premium, and it's still the focus on operations and delivering the profitability that they have been able to, for me it's positive and definitely in the right trend.
Okay. I want to now just sort of, as we're reaching sort of the last sort of 5 to 10 minutes of the panel, just to go look forward to 2022, and a question that I'm going to ask to all four of you. If you were to be able to pick out one key gold theme or trend for 2022, what would it be and why? I'll stay with yourself first, Alain.
2022, well, first, we're going to quickly realize that tapering is going to be put into question, and 2022 is the rebound for gold, and gold mines, because tapering is going to be put on hold or affected with the timeline. It's not going to be the June 2022 end of tapering. We know that for sure. Inflation is not transitory. Inflation is going to be sticky, gluey, not at these levels, but we don't see hyperinflation. We just see inflation, stable inflation, and therefore, and we talked about money printing. M2, I mean, can you believe that in 20 months, M2 was increased by 30%, and that's a quarter of the total money created in the history of the United States. So put that into perspective. We are in uncharted territories, totally uncharted, and that should be in favor of gold, because we do see lower real rates and we do see a weaker US dollar.
Jayant.
Well, I couldn't agree more with Alain. He has said exactly what I would have said. Gold price should start to recover strongly next year, because the market will start to accept that this propaganda about tapering and inflation getting back into control is not really real. It's not going to be achievable. And we do have an economic crisis in the world. We have supply chain crisis, and the world is not opening up as fast as it should. So we have a lot of problems, a lot of monetary chaos, too much money printing, and particularly a lot of money printing, which is going to lead to a better gold price scenario next year.
Kevin?
Oh, look, I'm not predicting anything with the gold price. I expect with mixed signals. I think best case scenario is we're going to see signals economically, which means, you know, gold itself is pretty flat. But I think on the project development side, I think it's going to be very strong. I think anybody who, if you look at the capital, I've said this before, if you look at the capital available and the prices and the sort of margins that you can generate right now, should be the operators should be generating strong cash flows. And now is a really good time to get a new project up and going right now, if you can do it over the next 12 months. Yeah.
And last word to you, Wilhelm.
Yeah, we always talk about gold, but actually we don't invest in gold. I think all of us, we don't invest in gold. We invest in gold and related equities. And if you look at the valuation, you see even among the more senior names, you see price earnings around 10. And in the smaller names, you see price earnings around 5, 6, 7. Well, compare that to tech, where price earnings of 30 are called cheap. And if the gold price moves back towards 2000, what we'll expect next year, there will be a scramble for, I think, the gold-related equities, since they're so cheap, and they'll start moving their dividend payments higher. But I would like to end on a small note on the discussion regarding Bitcoin. And I made the same mistake during the first years of the Bitcoin development and bull market, that I compare Bitcoin to gold. But you should never compare Bitcoin to gold. You should compare Bitcoin to fiat money. Bitcoin or fiat money both don't have any intrinsic value. And Bitcoin is capped at 21 million units, while of fiat money, 21 million units are printed daily. And then the decision is made very easily. And that's you have to buy Bitcoin as well, since the money printing will continue.
Well, I think we're out of time. So all that remains for me to do is to thank our panelists, who are Jayant Bhandari, Willem Middelkoop, Alain Corbani, and Kevin McElligott. And this is myself, Andrew Thake, from Minds and Money. Thank you very much.
Thank you.
Thanks,
Thank
Andrew.
you all.
Thanks, everybody.